Welcome to the Angel Research Podcast. My name is Jason Freert, and I'm here today with Keith Kohl, the smartest man in energy, dubbed by me.
That's right.
Specifically oil, which is I think was what we're going to talk about today. And we can talk about this later, but I mentioned this to Jeff, and I'm sure this drives you crazy, is, we're heading into election season, and you always see people tying oil and gas prices to, like, who's in office.
I feel like we've talked about this before,
Yeah.
but it's just the nature of politics.
Yeah.
Unfortunately, the president has close to no effect on oil prices. Now, there are caveats there because Biden unleashed 180 million barrels from the SPR.
I was going to say we should probably get an update on that situation because,
But for example, when oil prices rose dramatically, 2008, you can't blame Obama. You know what I mean? When U.S. oil production, more than doubled under Obama's administration. That technically wasn't because of his policies. That was just because where the industry was at the time.
Right.
With,
I guess if they
oil.
go super hardcore in terms of like regulation, like,
Right.
hey, I'm going to put out an all blanket ban on fracking, or you know what I mean?
Well,
like
we
shut
can
down,
we can
stuff
get
like
into
that.
that for sure. Probably when we talk about the election.
Okay.
But yeah, it's just the nature of U.S. politics where it's like if gas prices are low, you can claim it even though you have nothing to do with it.
Right.
If gas prices are high, you can hit your opponent,
Yeah.
which your opponent may have nothing to do with it.
Right.
And it could just be all market fundamentals. But yeah, so the last time we talked, I kind of explained why I was bullish on oil, right? Like why I wanted to buy oil stocks. And it's been really interesting since then because right after we talked, we saw oil prices. So oil's been trading, WTI has been trading in a range between 70 and 80.
Right.
It's gone above 80 a couple times in the last 5 months.
Just a couple of days it was
Oh yeah,
above 80.
we'll get into that for sure. And so we saw a price spike in April, end of March, April, and that was essentially from a host of geopolitical factors. We saw Russia get its refineries attacked for the first time. Then we saw Iran send that massive drone strike into Israel, which led to the retaliation by Israel. Like that was all happening at that moment, and that pushed oil to about $83, $84, somewhere around there. And then there was just a sellback to the low range as, we're talking like during maintenance season for refineries. So it's not really a period of peak demand or anything like that, March, April. And right around the end of May, something kind of happened there. Essentially, two things happened almost at the same time. I'd have to go back and see how close in relation they were. The first was OPEC came out and said, hey, here's our plan to unwind our production cuts, which has been one of the biggest things propping up oil prices, for the last, 2 years, right? Mm-hmm. So they basically announced that, hey, starting next year, we're going to start looking into, raising our production again. And so that caused a kind of like a huge sell-off in the market because it came right at the time when the IEA came out and said, oh, oil demand's peaking anyway. We're not using as much oil. And
right.
Those two factors just caused a harsh sell-off, and we were suddenly back into the low 70s again. That was at the end of May, early June. Then you have the summer driving season. So you start seeing big inventory draws for oil and gasoline and distillates and all that with the EIA's weekly report. And so the summer driving season comes along, demand starts getting higher, and suddenly we're back to $83, $84. So it's like if you bought that range, you would have been making a lot of money. Mm-hmm. What's interesting is I don't usually typically buy oil stocks during the summer. It's just the
before,
yeah,
right?
It's just the time of year.
Yeah.
I kind of want to buy when demand's low and oil prices are low.
Yeah.
And the latest like fundamentals and geopolitical volatility has just been this trading range between 70 and 80. And I honestly thought we were going to go, I thought we could have hit 90. I think it was very possible to hit in the mid to upper 80s.
I mean, you just mentioned, I mean, all the stuff that's been happening geopolitically, like,
Right.
and it's really, I mean, 80, even 80, 85 is still like cheap in my opinion compared
Sure.
to, I mean, what we were back in 2008, but also just
2022, we were at 120.
right,
But
and then
again,
just inflation that has happened. You know what I
Sure.
mean? On which has propped up a lot of assets.
Yeah. But what we started to see in July was a sell-off again. This is despite seeing crude draws and like inventory draws, and this kind of leads us up to what happened 2 weeks ago at the end in August. We saw a huge spike. I think it was July 31st, right? And that's when Israel assassinated the Hamas leader in Tehran, which is wild to fucking believe right out that they just went into Tehran and did it. So now like there was this kind of like, oh well, how is Iran gonna respond?
Well, they said they were going to, right?
Well, they said so in some pretty fiery rhetoric on Twitter, but you have to imagine, kind of Iran always does this kind of rhetoric. It's
well,
like,
yeah, they're like, we're going to wipe Israel off the map.
Close the Hormuz Strait in the last 20 years.
Yeah.
But almost right after that, what kind of sunk oil prices and almost what made me immediately bullish was when the market crashed. I think it was, August 6th?
I
August
believe.
5th?
5th or
It was like
6th,
2 weeks ago.
yeah. On a Monday.
And so that market crash, obviously, everybody in social media now is an expert in yen carry trades. I'm not. But between that and, say, a weaker than expected jobs report, that just caused oil prices to crater down to like, I think we got close to 70. And that was the moment I just wanted to start buying like crazy. And mostly I just wanted to unpack for you today why like this is a much better time to buy oil prices. So it's probably best we start with like, let's just run down the three big geopolitical fun events that have been going on, right? Like I'm sure we can talk about China and Taiwan and all that good stuff, but
they're like, that's back burner
right,
stuff now,
right?
right?
Like today's news cycle, China and Taiwan, we'll probably start talking about in the fall again.
Right.
But so we'll go into the Russia-Ukraine conflict, right? We talked about how for the first time, Ukraine is starting to attack their refineries, and that hasn't stopped. They're going after Russia's energy infrastructure. But more recently, what kind of might make this escalate beyond what just the typical, the typical volatility that the war has brought was the fact that Ukraine is now making incursions into Russia. And so they're attacking into Russia, which was kind of a red line for us in giving them weapons and money. I believe Biden said, like originally when we gave them all this, like, hey, you can use this.
Supposed to be to defend yourself,
right.
Yeah.
It was supposed to be a defensive war. And so I believe Putin came out almost right away saying, hey, there will be, blood for blood type rhetoric. So I can almost see, if this continues, that Russia's going to escalate this. And just a fun little side energy-related note. I think it was a couple days ago that a fire broke out in I'm not going to even try to pronounce the Ukrainian nuclear facility. But a fire broke out in the nuclear facility. Both sides immediately start blaming the other. And you can see how like, at a split second, like these geopolitical events can just turn like a $80 high range to a $90, $100 price spike.
Right.
The risk is there, and it's obviously just a risk. So we don't know. I'm not Putin. I'm not gonna tell you what.
So
he's
you're
gonna
specifically saying, I don't know, something like a nuclear meltdown in that region,
not going that far,
right?
But for example, Russia will knock out the power grids in Ukraine. when Ukraine starts doing that to Russia, when they start going after their oil facilities, I don't know if you were aware, but Russia actually has banned all gasoline exports out of Russia. And this is strictly because what they say, obviously the propaganda would say their demand is warranted, so like they want to keep their fuel for themselves. Truth is they need to fuel that war machine, right?
Yeah, and it also seems like there's been, Europe and these other areas that used to get stuff
Sure.
from Russia have, like, there's sanctions and all that stuff, so they've found other suppliers.
Well, I mean, in a way, sanctions are so ineffective; they're pretty useless.
Yeah.
I think you can probably find people that support them pretty well, but effectively, what Europe did was put a floor on oil prices, and Russia just turned around and said, "Okay, we'll just sell it to India and China, who
Right.
are more than happy to take
Yeah.
their oil." So not only is there a risk of escalation just from all that, but there's no real end in sight. I don't foresee, like, especially if Ukraine continues to attack inside of Russia, I don't see a ceasefire or a peace plan anytime soon. And I mean, you could speculate that, Putin would probably want to wait until after the U.S. elections anyway to see how the U.S.'s foreign policy would respond. I feel like a Trump administration would be wholly different than a Harris administration. When it
Oh, I
comes
don't
to that.
think you're going to get any arguments on that.
And Trump might be full of shit. Don't get me wrong, but he's still like he's at least boosting his own rhetoric.
Right.
He's more aggressive about it. So.
It's interesting, and before we started rolling, we were talking about this, that like even no one really knows even the policies of either of these folks.
Yeah, and and by the way, we can get into that when we talk about the election. Yeah, that's a whole nother wild card. But so you still have this like lingering 2-year geopolitical risk inside of Russia and Ukraine. And so we don't know where that's going to go. Maybe by the end of the year, when things are firmer, like maybe a peace, but I feel like the market has already baked in what's happened so far.
I was going to say, what would be if for some reason there was, I mean, whether it's brokered by the U.S. or somewhere outside, or if, I don't know, Putin dies or something, like if for some reason this war ends or it's like a peace deal, would that like have a...
And what does that peace deal look like?
Yeah.
Is Russia going to be given what the territories they seized
Right.
from the beginning, which everybody said that
But
would be
specifically
impossible to give?
just broader, like what would that do to the energy markets, to oil prices?
Well, we're going to see Russia's a part of that OPEC plus,
Right.
conglomerate there. And so we're going to see them, whether or not they comply with output cuts, because they're still under production cuts. I don't think Russian production has been too affected. We'll see more Russian exports. If we see a lifting of sanctions, we'll see more Russia. It could definitely lower. I mean, we're going to see obviously lower prices when the volatility just kind of ebbs out. Which brings us to I guess the more current volatility, which would be the Middle East. And so like this has got to be the highest of all the risk factors, simply from just the fact that it's got to be the biggest powder keg for the oil industry on Earth, without a doubt. And we're in this kind of holding pattern where something happens, and then we see a response, and then we see a response to the response, then a response to the response, and then so on and so forth.
Yeah.
And so the last time, like we talked about before, like the last time this happened, it ended with Israel kind of striking near a nuclear facility that nobody thought that Iran had, and so kind of was like a peekaboo attack, like, hey, look what we can do. And so everybody right now believes that Iran has to respond, and I kind of see that there's really 3 options, right? Let's say Iran's first response is just, we're just going to open this conflict up. We're going to go hard. We're going to take all our proxies. We're going to drag in all the local players, and we're just going to go all out on Israel. I don't think that's going to happen, especially since it's been a week since maybe a week or two since that's happened. A week, yeah. And so, or been 2 weeks since that happened. So Iran is kind of balking at this point. Like they'll huff and puff, but they won't blow your house down. You know what I mean?
Yeah, and the last response they had was pretty much they just sent a bunch of missiles over that everybody knew would be kind of shot down.
That's a great point. So like their response, and by the way, hundreds of drone missile shooting or dropping bombs, I guess, in Israel is a huge event. Like that spike, that should have spiked oil easily. But then you have to realize, behind the scenes, they leaked it to Turkey. Turkey leaked it to the U.S. We leaked it to Israel. And then what you have is we shot down every single one of them. And there was trivial damage that was done. So open war, I don't, that's one end of the spectrum. You don't see it's going to happen. The whole other end of the spectrum is going to be they're going to piss their pants and just walk away and just forget about it. They have to do something. And if they don't, it's kind of telling in of itself that of Israel's like strengthened position. But what's more likely is kind of down the middle, and I think this is what's going to happen. But Iran balks, right? So they don't make any direct strikes, and they use their proxies like they have been for decades. They'll use the Houthis, they'll use Hezbollah, and those will be the entities that make some serious strikes against Israel. So that alone would eliminate any idea of any kind of near-term ceasefire or peace deal, which, by the way, I don't think is going to happen anyway. I don't think I don't think Hamas wants a peace deal because they want to drag in the bigger players because they need a stronger military force to fight Israel, and Israel doesn't want to go to the table because I think it's a non-starter unless the hostages are returned, and it's just kind of fucked up that like we're how many hundreds of days into this and we're still talking about hostages that are being held and people are still criticizing Israel for trying to go after them.
Yeah, it's an interesting. I mean, it seems that I don't know if this is just what's being portrayed in the media or out there that Israel seems to be more aggressive this time, in terms of or there's just more people speaking out, I guess, against their aggression.
Well, that's the new fad to be anti-Israel. I don't want to jump into that.
Yeah, but I mean, it all plays into the fact of what is ultimately going to be the response and whether it spills over into a larger conflict.
If they give in from their see it from both points of view, and if you take the perspective of the Israelis, then this is just going to they're just kicking the can down the road for the next October 7th attack.
And
they kind of want to finish the job now, which I'm not going to wade into that political mess. But you can see the consequences of what would happen if, at the drop of a hat, Iran decides to, go hard. And the straw breaks the camel's back at some point, and then, then you have a recipe for something far greater than $100 oil. But and I guess I should note this now though. To want to be bullish on oil right now, you don't want to see $100 oil. You don't want to see $90 oil. You want to see a stable trading range, $80 oil. Everybody's happy. Everybody's making money.
Right.
And that's probably the best case scenario.
Okay.
So we don't want to see these wild swings, right?
And why is that? It's just because it's stable. They can kind of plan on.
You have to imagine say you're an oil company in Texas, right? And oil prices are $100, right? But then they're going to go down to $60, right? Because of whatever catalyst, right? You're making billion-dollar investment decisions.
Yeah.
Based off of and multi-year drilling plans based off of of oil prices and oil forecasts. So the more stable it is, the more and you can lock in those
long-term contracts at particular
can hedge for sure.
prices and all
Yeah,
that
there's
kind
a
of stuff.
whole
But people will be
dynamic with
less
that.
willing to do that if they're like, oh, well, actually, in a year, we think it's going to be $20 lower or
Sure,
$30 lower.
And there's always going to be seasonality to prices.
Right.
But, like, there's always the kind of the saying, the cure for high oil prices is high oil prices.
Right.
The cure for low oil prices is low oil prices. And that's what's gonna happen. But if you suddenly see $100 oil, you're going to start seeing a ton of anti-oil media out there just popping up.
Yeah.
Suddenly, the oil companies are the evil no-gooders that'll just ruin everybody's life.
They want to just fly under the radar. They want to just keep making a healthy profit, not get too greedy.
Yeah, I feel like $80 is a pretty fair price right now. I feel like once you get into the low 70s, especially into the 60s, and God forbid we ever go to the 50s or 40s again, I'll be mortgaging my house and just loading up. But then again, if oil prices today, let's say were over 100, say they were 110 like they were, 120 like they were in 2022, we wouldn't be buying oil. We would be obviously selling hand over fist, knowing that the backlash is coming.
Right.
Knowing
so
that.
You think, what would impact? Would it be a backlash or just the fact
there's a
that
backlash.
these, like OPEC's going to increase production and even in the U.S.
That's
is going to
part of the
increase
backlash.
production
You're
and
gonna
it's going to,
So you're going to see OPEC obviously at $100 oil be super happy and want to sell as much oil on the market as possible.
Yeah, because they don't care about any sort of
Right.
political
They,
backlash.
They want to
that money.
So OPEC is almost, I feel like they're committed to defend $80 oil. I think that's why, like, when we see a sell off to 70, we'll move it back up. And so that's kind of getting into the next fundamentals that we talk about in a second. Because let's just really quickly run through that third little geopolitical catalyst, which is Venezuela, which we talked about last time.
Yeah.
I believe last episode we were talking about how they were threatening to invade Guyana.
Yeah.
And they had elections coming up.
I was going to say
there was a whole lot of fun going on.
Yeah, that was going to say there's lots changed since that last time.
People in the United States, I'd say half, there's an uproar about election fraud, right? And I'll leave that alone. But what we're actually seeing in Venezuela is complete election fraud. So they held the elections. I'm not sure if you were paying attention to this.
But let's just run it down.
So they held the election, right? So leading into election day, the polls were saying that Maduro was losing by a landslide, right? So election day happens. 30% of the votes in, and Maduro just claims victory, right? Immediately, everybody.
You do the Trump stop counting.
Immediately, there's complete protests all over, and it's clear he lost. He lost big, and he refuses to give up power.
Yeah.
So now you have, the EU condemning him. I'm pretty sure the United States has condemned him by now. But what makes this relatable to us, and particularly the oil sector, is that for the first time over the last year, big oil companies were going back into Venezuela. And this is something that's kind of blowing my mind, because the last time big oil was in Venezuela, Chavez repatriated all their assets,
right,
and nationalized the oil industry. So big oil got screwed, but big oil is getting pushed out of everywhere else in the world from national oil companies. So they kind of don't really have a choice. And so I believe it was Chevron that has been in Venezuela helping produce, and they've been effective. With kind of that help, Venezuela has increased its oil production to about, we're over 800,000 barrels. I think it's around 850,000 barrels a day. 850,000 barrels a day, around that, give or take. But the other factor is not only was the factor that allowed big oil to go in there was that Biden rolled back sanctions. And this is what you were talking about before, where to how much can a president really affect oil prices? Well, we had sanctions that were crippling Venezuela. And then all of a sudden, because you can speculate because it's an election year, because you want to see lower oil prices if you're the sitting president, for sure.
Don't think it
Suddenly,
speculate.
well,
I mean, because
let's just stick with speculation for now, because I'm not going to.
I mean, he did that
sure.
with the SPR stuff. I mean,
Right.
it was clear, like,
and this was kind of his last gambit, because you cannot tap back into the SPR, especially if there was like some kind of crazy demand spike or like some kind of price spike, and you wanted to try to do it again. You couldn't do that because it's already half drained, and we've been filling it up slowly, but not fast enough, and it should never even have been drained in the first place. I'm always in the camp that the SPR should be used specifically for emergency.
not
it was put
like
into place
people are
in case we go
I'm afraid
war.
I'm going to lose
Yeah.
the election, and people are complaining about high gas prices.
One of the reasons probably why Russia and China are dropping the ball with Ukraine and Taiwan is we're in such a pretty poor situation. Like if they were just to go World War III on everybody, could you imagine tapping into a half depleted SPR?
Yeah.
It would be crazy. But thankfully they haven't caught on, or I'm pretty sure they're not going to watch this podcast, so it's okay. So back to Venezuela, right? So we have essentially a dictator that refuses to give up power. We have an administration that won't even address it, because I mean the Biden administration is kind of on a time delay until possibly a Harris win in November. I don't think we're going to see any major foreign policy out of Washington anytime soon. And so with the only, I should note this, the only requirement we had for rolling back sanctions, right, was that he had a fair and free election. That's the only one. And he clearly violated that. So naturally, logically thinking, you would think that sanctions should be back on the table.
Right.
Get Maduro out of there, get the elected president back in there, or the rightfully elected president, whatever you want to say. And then you can maybe help that administration out with developing their resources and all that. But if you put sanctions back on the table, you're gonna cut Venezuela's oil production right back down to where it was. I'm pretty sure it was 300, 400,000 barrels per day, right? But more importantly, you're going to cut the heavy oil that is being exported to the Gulf of Mexico, where our refineries are there. Because our refineries along the U.S. Gulf of Mexico are actually specifically geared to take in heavy oil.
Right.
So like when you have light sweet oil, basically you're going to get a lot of gasoline, right? And so that's why gasoline stockpiles are pretty high, mostly because the Permian Basin is just straight light sweet Texas oil. We don't have a lot of heavy oil reserves, and so that's where we only really have two major sources: Canada, which we're already getting between 4.5, 4.7 million barrels per day from them. And then we have Venezuela, which we haven't been importing from in a couple of years because of sanctions.
Right.
And so you put sanctions back on the table, that eliminates that. And you use that heavy oil for all your products, all your diesel, your distillates and stuff like that. And so it's kind of an interesting
I have noticed diesel prices have gone down.
Oh, for sure.
Since last year, for sure.
Yeah,
So you
that
think
may
that's a direct
that may have to do with
impact
demand
of
too.
the
I know
Venezuela.
In China, for example, diesel demand is lower, and all the dozens of articles you see daily about China's economy is about to collapse, China's manufacturing sector is about to collapse. I wouldn't give that too much credence because it's slowing. Maybe it crashes, down the line. I don't think so, because we're talking about one hell of a dictatorship over there. Where
Right.
was it President Xi that President Xi, I believe, outlawed short selling? Was it something like that? I vaguely remember. I could be completely wrong, but they won't shy away from manipulating
Right.
their economy in any way.
And it's,
Yeah.
and because of that too, it's hard to get actual real data out of there, and like, you know what I mean? They can prop up different things and all that kind of stuff. So unless you really are on the ground and
well,
dealing with that.
it's not that China's oil production is going to be declining. It's that its growth isn't going to be as astronomical as it has been in previous years. So I think like even if it grows around 3-4%, like that's a chunk of oil demand.
Well, yeah, and it's just
and they're the second largest consumer,
yeah,
so
big,
it's still
big
growing.
Country.
The U.S. is more flatlined. You know, we're not growing as much, but we're still consuming 21 million barrels per day of petroleum products. Excuse me. Which, by the way, if we're just gonna sneak in a little demand story, it's not even China that makes me eager to buy oil stocks. It's India.
Right.
And I believe India's oil production or oil demand, India's oil demand year over year is growing at like more than 7%, 7.3%, 7.4%. And that's not going to stop for the next decade. So they're going to, they're going to continue growing for the next decade, and they're going to overtake China as the world's largest demand growth story.
Just because they're starting from less. I mean, this was back 10, 15 years ago, and, you know, even now, I'm sure per capita, the oil demand for China is abysmal compared to the U.S. So it was just like, hey, if the China...
Per capita.
Well, per capita, exactly. Sure. But it's like, it's still an emerging economy, right? If they're still like... Yeah. If they're still going to, I mean, what are they going to, all these people that are growing and coming into like more wealth, are they just going to not use gasoline? They're just going to go right to
China has
electric cars with nuclear powered.
Very strong EV sector.
Right.
But the U.S. doesn't. And in fact, EV sales are actually not as good as everybody's thinking.
Well, I was just talking to our buddy Jeff Siegel this morning and about used EV cars are like down like 20-25%. Just because they, you know, new EV sales, they had to cut the prices to try to, you know, drive demand, and then that trickles down to the used market. So
right.
I might pick me up a cheap Tesla here.
Well, I don't know about that. Right. That might depend on the election. Yeah. That might depend on whether or not the Harris administration stays and the infrastructure bill continues, and we actually get those $7 billion for pumping up America's electrical charging infrastructure,
right? So
which is needed.
Yeah, let's talk about that with the election coming, because I mean, right now we're in the middle of August, and there does seem to be this thought that like Harris is, you know, leading in polls and that she has a great shot at winning. You know, do you think that's possible, or is this just sort of like,
I think it's absolutely possible.
Yeah.
I think, personally, I think Trump would have beaten a Biden.
I think that was becoming pretty clear.
I think it would have snowballed, especially after the debate, obviously. But I think, I'm not going to pretend like I know the inner workings of the DNC, but it was a change that they had to make, or else they would have, you know, whether how they did it or not, it was a change they had to make to even stand a chance, in my opinion. And you know, I don't know. You have a positive media behind your back. You have
well, I always said
you have an invigorated base, a reinvigorated base.
I always said compared to where Biden was at, Harris was going to look extremely sharp and together. Because
So take a look really quick at, you know, we can speculate out as to what the two administrations will look like, and then that could give me an idea of what oil might be going forward.
Gotcha.
So Trump is obviously the America First candidate with I believe that's even his policy name. So the America First energy policy is just, we're going to see more drilling. We're going to see more opened federal lands for drilling. We're going to see we're even going to see a bigger push for solar and wind. We're going to see a bigger push for nuclear, in my opinion. Mm-hmm. It's kind of like an all of the above strategy, which I think was what it was in 2016. So I can only assume it's going to stay similar to that. On one hand, that should add more supply. More supply is going to lower prices.
Lower prices, yeah.
So, it's
But
not the most egregiously bullish.
Right. But some of these, if you're opening up federal lands, I mean, that there's a long time before those start to like become fruition. Or is there like people just ready with a drill, like waiting for it and to pluck it?
They're not ready with the drill because you don't want to make billion-dollar investment decisions without knowing you're going to be able to do anything. Right. That brings us to the Harris administration. So the problem is, which is why we should probably talk about this in 4 months or whatever, is what is a Harris energy platform?
Maybe we will know.
I can only assume it's going to be similar to a Biden administration platform. And to be fair, there were a lot of positives, a whole lot of negatives. The positives, they had the infrastructure bill that it boosts spending for infrastructure, for EV infrastructure. You'll have, I believe but you're going to have some negatives. You're going to have a really aggressive EPA. The first week that Biden took office, he stopped federal lease sales of oil and gas, and that continued for years. That's one of the reasons why we made so much money trading oil over the last 4 years, because it's just,
he's
in my opinion, it's
supply.
Poor policy.
Yeah, he's restricting supply.
So
the people that already
it doesn't give you very good thoughts for U.S. energy security. But who knows? Maybe he's being told behind the scenes that we're not even going to be using ICE vehicles in the next year,
I'm sure
that EVs are going to take over by 2030.
No, I think in my opinion, I think what their belief is basically what I would call the cigarette strategy, right?
What's that?
Which is like, I mean, I don't smoke, but cigarettes are like, you want to buy a pack of cigarettes, it's like $20 now. Like they made cigarettes so expensive that people are just like, fuck this. You know what I mean? Okay, yeah, it is. Actually, it's bad for me. So I think that's their thought. Their thought is that if we just make oil so expensive that everybody will just have to switch to electric vehicles that are powered by solar and wind.
Well,
not realizing that oil is a global market, and all they're going to do is, like you said, make us less energy secure and make OPEC increase. They're going to basically enrich, quote unquote, America's enemies to make money.
And you're not wrong. If Biden administration makes it more, or a Harris administration makes it more costly to drill and to gain access to the resources, then clearly it's gonna have an effect.
The thing is, though, is like.
By the way, have you noticed that over the last 4 years, every major auto company on the planet announced like, oh, we're going to be all EV by 2030, all EV by 2027, all EV by 2035. And only over the last, I would say, year, you start seeing them realize that that's not feasible. And it's just like, we no longer have to pay lip service to the Biden administration, maybe. And so
I
they're
think
starting to walk it back a bit, with some companies even just scrapping entire EV lines.
Yeah, and it's just, at the end of the day, it's, what are you going to...
Like, adoption's going to be gradual. I don't think it's going to be... And then, obviously, there will eventually be a breaking point if the technology gets there. And God forbid we have a talk for another 10 hours on critical minerals and what it would take to go all electric, which is the reason why we'll be still using oil and gas and ICE vehicles for like well into the 2030s and 2040s.
Yeah, I think that goes without saying. And where are we at demand-wise in terms of transportation, though? Is that still like...
So obviously, I mean, I don't know exactly what you mean, but we're talking like it's obviously still going to be dominated by oil.
Right.
Oil, that's the transportation sector.
If everybody by 2030, let's just say everybody's driving an electric
Just
vehicle.
want to do a hypothetical there? What happens to it? Well, Middle East is going to be pretty fucked. The Saudi royal family is going to have to re-diagnose what's going on with their economy.
So transportation is still large.
You want to follow that hypothetical.
Yeah.
What happens if there are no ICE vehicles in 5 years, right? 2030, 6 years, right? 5.5 years. The amount of strain that would put on the electrical grid just in the United States would be so fantastic that, I mean, I assume if you're going to go so aggressive on EVs, you're going to have the backing for aggressive solar and wind. There is zero chance
I don't think that's an assumption, though. I think that
we'll start building coal plants again.
Right.
I think that without an aggressive move toward nuclear power, we would never have the electrical generation necessary for that kind of.
Well, even
strain.
California, I think, weren't they telling people like not to charge their electric vehicles like at certain times because of the grid couldn't even handle it.
True.
And
but in California, in the last, I want to say in the last couple of weeks, Chevron announced they were leaving and going to Texas, which is a pretty big deal considering Chevron used to be called Standard Oil of California.
Mm-hmm.
So it took less than a century for them to kind of get run out of the state.
Yeah, I think people are starting to be more practical about a lot of this stuff. I think maybe they think electric vehicles are cool, but there's going to be a large swath of the population that I think will never, like, they'll die before they buy an electric vehicle.
Yeah. Right now, electric vehicles are more for wealthy or better
like
off
a status symbol.
individuals.
Yeah, I'll tell you what. Around Maryland, where we're at, I'm sure you see there are Teslas everywhere.
Sure. Yeah.
Everywhere, and there's other manufacturers.
I saw my first Cybertruck in Maryland last week.
Yeah, I've seen a couple of them now. So
best of luck to them.
Yeah. So.
But I don't think that it would be possible without that hypothetical. Isn't even possible until you address the energy demand needed for that amount of that sheer massive amount of electricity, and also the charging stations that would be necessary. Not everybody owns their own home. Our apartment complex is going to be required to have one charging station per unit, per car. What would that look like?
Yeah.
Who foots the bill for that? Does that go to the building and get split evenly? I have no idea. Because I think it's unrealistic.
Yeah.
So
especially in that time frame.
Yeah. But looking at demand, I think that what's interesting is we can fantasize about all that. It's not going to happen. And if you want to dig into numbers, the truth is demand is robust. In May 2024, the U.S., the EIA had to go back and revise their. So they put out a weekly report, oil report, which is not as accurate. It's based off of their short-term energy outlook forecasts, so it's not really a good barometer of what's going on. But every month, the EIA comes out with a monthly petroleum report, and that's where you can get a more accurate statement, like viewing. Problem is that it lags in months. So the latest one showed May, and they just had to, just quietly revise their demand upward. And so it turns out that in May, we were consuming 20.8 million barrels per day, which is, I'm not going to say for that month, I'm pretty sure it was a record. But more than that, gasoline demand in May was 9.4 million barrels per day. That's a post-pandemic record. So it's like we're back,
Even with all the electric vehicles out there.
Even with all the electric vehicle hype that we've had. And I mean, EVs have made tremendous progress. I don't want to come off like I'm anti-EV. I'm huge on EVs. It's just that China's doing it much better than we are. And we have a lot of serious conversations that need to be had at very high levels, not on a Delaware beach. We need to have those conversations with the people who are making the policies.
Right.
But this leads to another bullish demand signal, which is OPEC. So OPEC just came out with their most recent report, and they revised for the first time. I want to say in a couple of years. I don't quote me on that, but for the first time in a long while, they revised their oil demand for their global oil demand lower, just a little bit. And so everybody obviously will jump on that talking point and saying like, oh, demand is collapsing and stuff like that. That's furthest from the case. Oil demand is going to be, according to them, it's going to be at 105.5 million barrels per day in the fourth quarter of 2024.
But that's revised down.
No, that's the number.
Gotcha.
So 2024, they're expecting global demand to rise by about 2.1 million barrels per day total, right? So by the end of the year, we should be consuming close to 105.5. And so what makes this interesting is normally I would say take everything that OPEC, EIA, IEA, trust but verify, right?
Gotcha.
OPEC has a history of shenanigans. The IEA is just the same. They're notorious for coming in with underwhelming numbers and underreporting demand because that suits their agenda to want to push for electric vehicles and clean energy, right? So everybody has their own agenda. OPEC obviously is going to have the highest forecast because they want to sell oil. But what makes OPEC so important, right? What makes OPEC's forecast more important to me is that this is what's going to dictate OPEC production cuts unwinding. So if demand is lower, we can absolutely expect OPEC to keep those cuts well into 2025. Mm-hmm. You know what I mean? And so higher demand might be good and for oil, but it's good for OPEC because they're the ones that are controlling all the supply capacity. Non-OPEC, right? So just really quick. I'll run through them really quick. Non-OPEC supply growth sources. You're looking at four countries that are going to make up like 75% of global supply growth. You got the U.S., right, which is now, last time we talked March. I told you we were producing 13.3 million barrels per day, which was an inflated number because of the way the EIA reports adjustments and all that, and transfers to crude oil. And there's a whole entire messy methodology process that they do that is really obscure. And so I told you it was going to come down. We see less drilling rigs. We see an aggressive Biden administration toward the oil industry. We see an oil sector they don't want to make billion-dollar investments that are based on this might happen. So since then, our production has actually declined, and we're producing around 13.1 million barrels per day. And so our production growth is flat. You see more demand. We can't answer the call like we have for the past 16 years where our oil production tripled or quadrupled. We were producing, 4 or 5 million barrels per day in 2007, and all of a sudden, almost doubling or more than doubling since the tight oil kind of shale revolution.
It's interesting. Do you think it's
so we don't have? So let's say oil continues to grow even at 1 or 2%. We don't have that capacity to add supply, and that's the U.S. Under a Trump administration, we'll probably see more drilling. We'll probably see growth continue to go higher. Where it goes, who knows? But it won't be a sudden spike. We can't, drilling is not like turning on a tap. It takes months.
Right.
There's a whole entire process. But so that's the U.S. So you're seeing flat supply growth in the U.S. And by the way, I'll note that the EIA, their weekly report, had our production at 13.4 million barrels per day, because that's what they were forecasting in their short-term outlook. And so they're going to play catch-up eventually and have to lower down all these numbers. So it's like I said, you got to take all these reports and kind of dig into them to figure out what's going on. So you have the U.S. with flat supply growth, right? Then you have Brazil, right? So you got the U.S., Brazil, Canada, and Guyana. Those are basically your those are your biggest supply growth countries, non-OPEC, right? Brazil just went through a major outage in June. They lost 1 million barrels per day.
What happened?
It was like I assume that most of their production is offshore, and so there was just an outage.
Gotcha.
Shame on me. I probably should have realized whether or not it's back up, but I can.
Maybe
I can take
they
a look.
were.
But
Maybe
still,
they were using that
at the drop of a hat.
Microsoft.
At the drop of a hat, we lost 1 million barrels per day from Brazil. Canada is actually kind of a shining beacon for me because they can still grow production. They just had the Trans Mountain Pipeline kind of start going underway. So now they can not only sell us a massive amount of heavy oil that we want and need, but they can also send it to China. And so they just increased their customer base, which could increase competition, obviously, which is going to raise prices for them, which is good. But so Canada's, still it's not going to be exorbitant growth, right? You're not going to see radically huge growth year over year. And then you have Guyana, and I believe they announced recently that it's going to take the time to ramp up their production in their major offshore discovery down there that Exxon's been playing around with. That's going to delay. That's going to be a little bit more delayed than we thought. It's going to be a little bit longer, and so their production growth isn't as strong as. So we have pretty underwhelming capacity growth, like production growth, supply growth from non-OPEC sources, which puts all the power straight into OPEC plus.
Yeah.
And so you want to talk about energy security, like OPEC is directly in charge. And when they control supply growth, it's like a blast from the past. Like when they control that capacity, then they dictate where the prices will go by cutting and
that's the way they like
increasing output. Yeah, no, absolutely.
So if you're looking to deploy capital right now in this sector, what are you doing? Are you waiting? Are there specific countries or regions you're looking at? Types of plays?
I personally like the Canadian oil sector. I think that the valuations there are too attractive to pass up, especially when they have a pretty anti-oil Trudeau government, but that who knows if that's going to stay in place. With the United States, I'm pretty sure we talked about this last time, but I don't go cuckoo for Cocoa Puffs over massive discoveries, right? That's not the name of the game anymore, right? Like there's two main catalysts I see that are going to bring a lot of value to U.S. drillers. The first is the fact that big oil is just buying up everybody. They had a very strong 2022, 2023 with oil prices, and they're taking that capital and they're just scooping everybody up. Exxon bought Pioneer Natural Resources, Chevron bought Hess, even Diamondback Energy bought Endeavor. They combined, so Endeavor Energy. So now they're in like the top 3 to 5 producers in the Permian Basin. So finding a good company that is drilling with the assets that might be attractive to big oil or somebody with a large war chest, because the M&A is not going to stop. It's going to continue. That's how major oil companies grow. They don't grow through the drill bit. They grow through buying other people.
Yeah, somebody with a large war chest that we know is our friend Warren Buffett.
We can get into that.
And
sure.
I just briefly mentioned or saw that the headline news is how much cash Buffett has. He reduced his position in Apple, but one of the positions that he increased, at least in his last quarterly, was his position in Occidental.
Well, that doesn't surprise me. Buffett is a huge fan of oil stocks, even though nobody really talks about that too much. His first trade was an oil stock, which actually, through the course of time, evolved into Occidental Petroleum, which is an interesting throwback.
He's still in it.
Yeah, and he's still in it. So like I think that's one of the reasons why he's in it. You buy what you know. That's one of his mantras, I'm sure. But yeah, what is it? $287 billion of cash sitting on the sideline. It's going to go somewhere, and you kind of, I think if you take a look at how he invests, I think if you take a look at what he looks for in his investments, that fundamental analysis, and you find those companies, then maybe he might have oil in the stars for him. But aside from Buffett, the second, I think, area I'm looking at isn't necessarily the companies who are drilling a whole lot. It's more about who's drilling efficiently, right? And so the important part about U.S. oil right now is more with less. You got to drill, or you got to produce more by spending less and drilling less, and you can only do that through just improving the technology.
Right.
And so you take a handful of companies that the average investor has no idea who they are, because they're not Exxon, they're not Chevron, they're not ConocoPhillips, and you can sort of kind of choose your racehorse by that way. And
yeah, excellent. And ever since I've known you and been following this sector, it's the biggest gains from your portfolio have always been these they're in the oil sector, but it's like technology driven. And
there's a lot of interesting completion techniques and drilling techniques that are being utilized now, and I think that those are going to become the mainstay, the go-to, the standard operating procedure for most of the operators, especially if we have a flat growth projection, especially if we have a Harris administration, which would be, so we talk about what wild cards are in the political realm of energy policy. This is the first time we have a presidential candidate that's on record saying, I would completely ban all fracking. I don't think she realizes that 95% of all wells drilled in the United States require some sort of hydraulic fracturing stimulation to produce oil. So
I don't think she knows what fracking is.
It's up there. She'll lose Pennsylvania for sure.
Yeah, don't want to do that. Not going to win with that.
But that's but absent an actual energy platform that I can look at of hers, because I haven't seen it yet. I don't think anybody has. I can only assume it's based on Biden and on previous, actions. So it's just be an obvious push toward the green, toward green energy.
Well, while we will definitely do that, we'll try to schedule something a little bit closer to the election, and hopefully there'll be more clarity on any sort of policy and decisions that might be in place, and also hopefully we won't be, talking about more conflict. But I have a feeling that we will.
Yeah, we'll get to it.
All right, thanks a lot, Keith. Don't forget to like, subscribe, and comment, particularly comment. And we'll put links to a couple of things that Keith was talking about in the description, and we'll see you next time. Later.